Today we're sitting down with the Chief Operating Officer of Extreme Networks, Norman Rice. Norman Rice has an incredible background and strong track record of creating value within companies and developing executable, profitable growth strategies, helping his companies with M&A, operations, global sales, marketing, product management, business development, strategic leadership, and much more. Norman's background really consists of being the ultimate entrepreneurial problem solver, and today we talk about all the different perspectives he has of venture capital, private equity capital, public companies, and what he's learned on his journey as an entrepreneurial leader. We hope you enjoy this conversation with Norman Rice. Norman, I wanted to start this conversation with a little bit of a reminder. I had to remind myself a little bit, and maybe a good reminder for you about how we met, because I think it's a really good prelude into why I wanted to have a conversation with you today on our podcast. In April of 2013, I had just moved to the New Hampshire market for about a year, and I was looking to raise capital for a company. And I started doing research, and inevitably, even in 2013, LinkedIn was kind of the place to go. So I went on LinkedIn. I was doing private equity, investor, New Hampshire, Portsmouth, New Hampshire. And the only person that would come up would be yourself. And I was looking at, okay, who's he connected to that I'm connected to? And I wasn't connected to a lot of people because I had just moved to Portsmouth. But inevitably, I ended up getting on a phone call with you and didn't know you from Adam, but had a good conversation, learned you were from Detroit and some of my Detroit connections. And I really wanted to just sit down with you and have coffee and say, look, I'm looking to raise some capital. Can you help me? And from that conversation onward, all the learnings I've had from you from those conversations, probably should have kept those conversations going a lot longer because I did make some capital mistakes after those conversations that I wish you were around for to help me with. But I learned a lot from you. I definitely have watched what you've been doing with Extreme Networks recently, which is incredibly impressive, and want to learn more about that. But I know that our entrepreneurs can learn a lot from you, as I know I did, and continue to learn from you. And excited to have you on the episode today and have those conversations.
Yeah, thank you very much. It was legacy sports, and you were looking at, should we go into lacrosse was one of the areas. We looked at all those different areas and how do we expand that business. So happy to be here. Thank you, and happy to share.
Absolutely. Well, maybe for our audience, if you can, Norman, take us back, because I was looking at your background again this morning, and like one thing popped out at me. For example, like in 1999, you're working for MicroStrategy. They probably didn't own, Michael Saylor probably didn't own Bitcoin back then, but you've had a very interesting track record, both as an independent investor, part of a private equity firm, part of companies, operationally, M&A experience. There's a lot there. Can you give us maybe a brief synopsis of your career so far?
Yeah. So like you said, I think it started with MicroStrategy. So out of grad school. So actually rewind a little bit before that. So I was in college and I was doing an internship in a waste management company. And it was an internship where we received credits, and they're like, oh, and we got paid. We're like, oh, this is great. It was a double whammy. It was like, it worked out. And as I was looking at it, there was an opportunity to automate a lot of the reporting. And so I approached the guy that was managing the program and said, hey, I can automate this programming, but you have to hire me. And they said, hey, if you can do that, we'll do it, which of course I had no way of doing that. I had no idea how I was going to do it. So I said, oh, okay, well, I'm not going to work for you. You have to hire my company. And so I set up a contract, which I didn't know what I was doing. And I established a contract with that company, and they hired my company to automate all of their environmental reporting. So, which was great. And I set a rate, I set timing, a project plan, all this stuff. Then I had to go back and figure out, how do you automate everything? And so I went to a classmate of mine at school who also was a founding brewer of Motor City Brew Works, who happened to know programming, and said, hey, can you do this? And so I subcontracted him, or pulled him into the mix, and we kicked off a company that was just the two of us, and we were automating environmental reporting. We ended up expanding into several different companies that bought our technology, and they bought our service. And in fact, the guy that originally hired me for the internship left the internship or left that company, started his own using our software, and actually bought us out. He bought our company out. So it was right out of the gate, entrepreneurship. And the idea was identify the opportunity, sell the story, then figure it out. And I'm sure that's a common theme amongst everybody you talk to. So that's where it started. I went to grad school. I used some of the proceeds to pay for grad school. I went to Dartmouth uh, for a master's in engineering management is where it started. The first, MicroStrategy. So the first company that hired me, they were the ones recruiting. And you can imagine, you got Dartmouth, Ivy League school, it's graduate school, it's Tuck business, it's engineering. So we had management consultants, it was like McKinsey and Boston Consulting Group and all that kind of stuff. Investment bankers, it was Goldman Sachs, it was so and so. And then there was sort of everything in between. And I didn't fit in any of them. I didn't fit. I interviewed. I was like, oh, geez, management consulting sounds cool.
Yeah.
I was like, I talked to the investment bankers. So like, you're not exactly what we want. And then there was this sort of middle group, which was technology, and they were recruiting. And so I sort of found a home there in technology, again, knowing very little about technology, other than that it's malleable and that you can figure out how to solve problems using technology. And so I went to MicroStrategy, and MicroStrategy had just gone public. We were growing 100% a quarter.
Yeah.
And you go through training. It was actually a night and day. They recruit. It was a fun story, do all this fun stuff, parties, all this, stuff. Yeah. The day you sign, you go to 8 weeks of training. The first thing they tell you is you get a test every day. If you fail, you're fired. Wow. I was like, whoa, I'm not ready for this. And 20% of your class gets fired.
Wow.
And so what I learned was I have to learn technology. So very quickly, I learned how to do it. And I was looking for what do I do? And I ran into a friend who had worked at a company and said, hey, we're about to sell it. And why don't I introduce you to the buyer? And so I got introduced to a private equity firm that was buying a company locally.
Yep.
And they said, hey, do you know something about software? I said, I know something about software. And they said, hey, it's kind of near you. Can you get there? I'm like, yeah. And they said, okay, how about you're hired? We don't have a job for you. We don't know exactly what you're going to do, but you're going to start tomorrow and go meet the new CEO. And so I go to the company, which is a Prisma. It was a networking management software company spun out of Cabletron. If you know any of that story, it was Cabletron became blown up into 4 companies. Interisys was public. They filed their S1. By doing that, they committed fraud, and all this SEC stuff unraveled. And I had no idea what I was walking into, zero.
Yeah.
And the CEO looked at me. We both walked in the door. He looked at me. I looked at him, and he goes, "Guess what? What?" He goes, "I don't trust anybody here except you. And the only reason I trust you is you and I are starting at the same time." And so that kicked it off. And the two of us went in, and I played a bunch of different roles. I never had a specific role. And we turned the business around, fixed it. He knew what he was doing. I didn't. He taught me a bunch of things. And ultimately, we sold the company 3 years later. So I had a big operating experience. We had a 10x return on the investment. And then we sold the company. The company we sold it to was in financial duress within 90 days. And we sold that company to a bigger company, Computer Associates. So it was a big triple whammy. And at Computer Associates, I was running a business, the telco business there. But what happened was I had earned street cred with the private equity guys because we had done this. So one of the guys who was the deal partner in the private equity firm was leaving to start his own firm, and he needed some people to line up with him, and he was able to raise his first fund. And so I supported him, and I became an operating partner in his very first fund. And it started at $30 million. And I also sourced his first deal. And that fund is now gone on. It's Marlin Equity. They're now a stalwart in technology buyouts. They're a $3 billion fund.
Wow.
And I worked with those guys on the first several deals, and was involved in a bunch of different stuff. And it also got me to want to go independent and work with different private equity funds, and work with as an operating partner, and then also work with a couple of hedge funds on public market investing around activism, because I was curious about what happens when a public company has problems similar to what private equity firms solve. And I learned the good and the bad of all of it, which I'm sure you'll ask me, but it was good and bad and crazy. And so I'll pause there. I know I gave a long answer to your first question, but that's how it all got started. And then, and then we can pick up the extreme thing, because it's all part of that same thread.
Yeah, that same thread of operating partner, right? In terms of going along with equity, I think ultimately has became a specialty for you. Is that fair?
Yeah, fair enough.
One thing that I caught early on here that resonates, I think, with a lot of entrepreneurs. I don't think it would resonate with all of them. Rich and I talk a lot about, some people are ready, fire, and then they aim later, and some people are ready, aim a little bit more and fire. And Rich and I have a little bit of different philosophies on that sometimes. But you said three things entrepreneurs do a lot is they identify opportunities, they sell the story, and they figure it out.
Yep.
And obviously from your first go at it, like you had no idea how to do what you were selling, but you saw the opportunity and said, look, I'm going to form a company. I'm going to figure this out. How much has that played into you as you gaining confidence in that one opportunity to go, I can really figure anything out. I can bring on experts. I can bring on different people who have specialties in these different areas. From an entrepreneurial perspective, that must have given you a lot of confidence.
Yeah. I mean, John, I'd say the same thing about you. That's what I saw with you, is that you would just figure it out. You'd identify something, form a group around it to address it, and then figure out the opportunities you go. But you know that there's an intuition there. I think that what it does is it's like a life analogy, right? You're going to have setbacks no matter what you do. And it could be an injury or something catastrophic, a loss or something bigger. And as you go along, you can choose either to be a victim or to grow from it and evolve, and not let it be your victimization, meaning that it becomes your propelling event. It becomes an energy behind you that says, go forward.
Yep.
And I think personal and professional lives, that happens a lot. And so what I found with myself is when I have a setback, that setback doesn't become a crushing defeat.
Yep.
It becomes a reason to regroup and go. Now, it's not always immediate. You lick your wounds and you regroup and then you go. But ultimately, it becomes a stepping stone. And where I am today, as an example, is directly a result of having failed in a number of scenarios along the way. And I think a lot of it comes, you learn humility, and you also learn that you don't know everything. And what you have to do is get people around you that are experts, and then quickly learn what they know, and then keep rolling. And I can tell you, it is all about you set a direction and say, I want to do this, because I believe it can be done. And it's not going to be perfect how you get there, but there's a lot of things along the way that are going to be challenges, and you just have to adapt and overcome. And it's 100% the confidence that you build through all these different steps that get you there. And it doesn't mean you can't get there right away. It doesn't mean that at all. It just means that, it just means that when you get to these challenges, you're not rattled. It's like, that's the thing. Like, when people have been in trouble, or you've been in issues, if you're not rattled, like, stuff's going to happen all the time, and you don't get rattled, and you're able to adapt, then somebody's had that experience.
Rich, that reminds me of what we used to call fundamental ability.
Mm-hmm. Yep, your ability to regulate your mood. I'm curious, Norman, every successful business begins as an idea. It begins as a dream. It begins as a startup. And there is some level of figure it out that you certainly, it sounds like through your story, have become an expert at just figuring it out, from the automating reporting to, in the technology field, avoiding getting fired when 20% of the class was getting fired. And you're like, I have to learn technology, so I'm going to dive in. Getting hired for a job that you don't even know what you're doing, and you're meeting the CEO tomorrow, like, you figure it out. What's the balance between the confidence to figure it out and then a statement you just made a moment ago around humility? How
Yep.
do you stay humble while you're selling something that you don't exactly know how you're going to pull off? And like, what's that blend for an entrepreneur who wants to sell somebody on, I can do this, but I've never done it before. I don't really know what I'm doing. I can find other people, but you need me. Like, how does that work?
It's the fine line of I think that the primary thing I think about when you go into a situation like that is you're not the smartest guy in the room. Just start with that premise, which means if you go in believing you're the smartest guy in the room, then you convey arrogance. And when you convey arrogance, people get turned off. And arrogance, people are impressed by people that have confidence. They're turned off by people that are arrogant. Like, I'm going to come in here and change the world for you. It's more what I've realized is the more, be myself and have just a holistic view when you have that conversation. And I can tell you, I've been in the biggest rooms in the world doing deals. I've been at, Park Avenue, and the head of the NFL, head of sales, she came in and said, you need my logo, because when you use my logo, every one of these banks, there were 14 people in that room. I was by myself. You know what I said? I go, you don't understand our business. It's not how it works. And it's true. It wasn't a, blah, 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 blah. That doesn't work. I've been in these rooms where you fight against, some of the craziest stuff. We did an M&A deal against one of the most savvy sellers that you could ever have. And in that room, what I did is I stood up for what we believed in, but I was also scared and not sure if this was the right thing to do. And at the end of the day, we didn't have to do the deal at all, right? It wasn't like it didn't matter if we did it or not. But it's one of those moments where you test your mettle and you say, okay, you're going to be against overwhelming odds at points. You're going to be in the biggest arena and the smallest arena. There's not that much different. It's actually the same thing. It comes down to people. Just don't be arrogant. Be confident, but be also actively listen to what they're saying. Because if you're actively listening, then you have, all the other senses in your mind about compassion and understanding come in. Arrogance is when somebody just has a talk track and they go. And you can smell it a mile away. You guys have seen it. Somebody comes in, you're just like, this guy has no idea what he's talking about. Or they might be the greatest person. Cultural compatibility, not going to work. Mm-hmm. So that the answer back to your comment, it's a fine line, but just don't be arrogant.
Mm-hmm. Yeah, that's powerful. It's occurring to me through the conversation, you've been involved in so many things, and then you've exited many things as well. I want to know, what's the criteria you use before you're going to get involved? And then how do you know when it's time to get out?
Great question. Getting involved, that's always the hard one. And I know you guys know this. The hardest thing is you can spend a ton of cycles on something that's not going to go anywhere. And you can spend a handful of cycles on something that's going somewhere big. And I think that's probably the hardest thing. I think the hardest thing is to realize what's going to work and what's not going to work. And I wish I had a specific definition.
I was going to say, how, Norman? How do you know what's going to work and what's not going to work? And like, if you were to draw a line and go, there are these 3 principles that I know it's going to work when I see these 3 things. Is there any consistency that you can offer?
Yeah, I mean, the thing that, for example, I just talked to a company yesterday that wants to form and entrepreneurs, they want to start something. And it's really, is this something unique and sustainable number one, i.e., is there a market opportunity that's unique and sustainable, and you're not running uphill. You're not putting a discount store next to Walmart, right? You're doing something unique and sustainable. Number two is, do the people have the passion to see it through? And you hear that from any venture investor. Private equity guys are a little bit different. They don't look at it that way. They want business continuity. But a venture leader will invest in a person. You hear that a lot. Like, we invest in the person and the idea. What they mean by that is this person willing to dedicate every fiber of their being to make it successful. Because we don't want somebody who's a 9-to-5er and just says, "Oh, geez, it didn't work. Sorry." Yep. And then the third thing for me would be that I would balance that with, do they have the business acumen to understand the challenges and the pitfalls? So I would say my lens is a combination of the venture lens, which is the passion, and then the private equity lens, which is the business comprehension, and then the market segment. And then market segments are your interpretation. I prefer market segments that I understand. And there are lots I don't, but when it's something I understand, I can tell if it's going to work right away or not. And that's pretty much how it works. That's how it's come together. And that's both from successes and failures, and spending time with groups that I wanted to succeed, but we weren't going to succeed.
And that's a nice list. And I can see that: unique and sustainable, people that have a passion to see it through, who are really dedicated with every fiber of their body, you had said. And then number three, the business acumen to understand the challenges and pitfalls and ultimately go see that through. For a company, you do business with people, not really companies. So instead of saying a company, I'm going to say a person.
Yep.
For a person who is considering doing business with you, what is your unique value proposition? Why would I want to do business with Norman Rice?
The way that what I'm really, I'd say my core competency is, I'm a problem solver at the end of the day. And so that problem is either significant or small. And I think, a lot of entrepreneurs that I talk to, and I failed to mention, I was part of the founding member of the Dartmouth Entrepreneurial Network. So I advised a lot of companies, including one that went public in Boston. And their model changed 100% from what we saw to what the public company is. But the people were the same. And it was just, they had the right stuff. They were in the right segment. They just had the wrong model. And but it's a great story. But I think people come to me because it is that kind of broad experience around, private equity. What's that like? Venture. What's that like? Public company. What's that like? I'm an executive at a public company. I'm an officer of a multi-billion-dollar company, and they're all different. And so it's easy for, it's when people ask me questions, I do have a vast array of experience that I can provide insights into, whether it's a 1031 exchange in real estate development to an M&A deal that's upside down on leverage to, a partnership deal that goes sideways to a customer prospect. So it's a wide array. So the value prop is, what are you looking for? And if you're starting a business or it's a new area or something else, talking to people or looking for an advisor that has that full gambit. Because what I see is, if they're operational, like if your advisor is, they operate, all of their, it seems silly and straightforward, all of their advice is going to be about operations. Yeah. If they're a finance person and they're an investor, all of their advice is going to be about how they invest and all this kind of stuff. And I feel like the best advice is somebody who's been on all sides of that, meaning that, private equity is not the ticket to the promised land. It's
Well,
work. It's
hold on a
not.
second. What? You went right where I was going to ask. So I want to continue your train of thought.
Yeah.
You said, and I caught this, you said, look, there's three things I look for: unique and sustainable, people have passion, and business acumen. But then when you said people have passion, you interrupted that and said, but PE companies look for something different. They're looking for business continuity. So they're not looking for that, but I look for that. And then right after that, Rich said, Norman, isn't it true that businesses, do deals with people, not companies? And it just had me thinking as you were talking, what is the difference between private equity and venture, or private equity and kind of how you invested? Because, I was obviously part of an experience with private equity, and I got, my butt chewed out and spit back out. And it wasn't about people and passion at all. It was about business continuity. And it hurt a lot of people because of that, because people were very passionate about this particular business, as you know. So what is the difference between private equity and venture, and why does private equity not care about the people and passion, and why do you?
Yeah, and that's why I left private equity. I thought that would be a really interesting thing to do, but I decided that wasn't I didn't want to be part of that. So I think that people. So what's the difference between call it venture or investing, and then private equity? So private equity is 100% about a financial gain, and it's 100% a function of, we believe that we can make fundamental changes in the business or tweaks to generate a better income and financial outcome. Yep. And so as a result, as you people may not know this, but a majority of private equity transactions are around 50% levered, which means about 50% is debt owed to the bank. The other 50% that's presented as equity is actually a form of debt. It's preferred debt, which means preferred equity, which means it carries a dividend on top of it. It carries a coupon. Mm-hmm. So the financial models are all built around having to pay for that return.
Yep.
And so how you get the return is completely, in many ways, it's irrelevant. It's the guidance is, if the return comes from, you'll see this. There's transactions that I'm aware of, and there's public transactions that occurred where private equity made a return by taking the company into bankruptcy.
Yep.
And you would believe, how is that possible? But that's possible. And oh, by the way, those bankruptcies are generally very orderly, because the debt holders have a different outcome because of what their financial opportunity is with private equity going through this process. Yep. So it's counterintuitive, but ultimately just think of private equity is 100% about a financial return. And the idea, the people, and even sometimes the outcome doesn't matter as much as the return matters. And you would think that an outcome should be an exit, an IPO, something else. That may not be the case at all. And so it's very difficult to understand. If you just believe that the driving principle for them is return, then you will understand it better. And you will see there are people that are very savvy, that are operators, that understand that. And there's a very lucrative lifestyle and function that happens as a result. So, and a lot of companies need that, by the way. There are companies that are so just poorly operated that they benefit from that. And there are many others that are just caught up in the whole situation. Yeah. And so that's on private equity. On the venture side, it's more of a belief in the future than looking at the historical operating and believing that the future can be built based on historical operations. venture and just forward investing it's what's the art of the possible. And so it's a lot more of there's a compassionate element to it, because you have to have a belief or a conviction about the future, and is there something fundamentally different. And categorically, when you look at big venture funds, they're looking for 10 times return, and they're looking at 10x return. That's what they're looking for. And they also expect 9 out of 10 of their investments to fail. Mm-hmm. And so they're willing to roll the dice to make one of them really, really, really successful. And they'll bet in a category. And what they're looking for is if there is something that's fundamentally going to create a disruption or a change, that could be the 10. They're not looking for, oh, geez, here's somebody who's a better operator and they're gonna do a business better. And I'm speaking in generalities, but sure. I think that the fundamental difference is both are looking for a return. One is defined by the return. The other is defined by, the art of getting to the return. And that's my personal perspective.
Can you expand on a piece of that for my benefit? On the venture capitalist side, you said there's a belief in the future and an art of what's possible, but then you also said 9 out of 10 investments fail, and they kind of bet on the 10 investments in one category, and they'd like to see one succeed. Can you expand on that? I'm not getting the link between somebody actually believing in your future and then believing you have a 90% chance of failing.
Well, believing in the future, that's back to like their fundamental driver is the passion from the person. And if they know that the person's willing to fail, they'll bet on that person and obviously that market opportunity or that idea. So they fundamentally, for a venture partner to bring to the investment committee, they have to have a 100% conviction that this could be one of the 10. So every deal goes in, this could be one of those 10. It's a 10 banger. They all have to come in with a 10 banger opportunity. That's the criteria. And then it can't be geez, we think we could double our money. No, it's a 10 banger. So you have to come in. So it's true conviction. And then they're all willing to accept that some of these are going to fail. They're going to flame out. And they'll flame out because the market doesn't evolve exactly how everybody thought. The entrepreneur may flame out, they may burn out, they may have a change in life, who knows? And then they're stuck in a different position, and all those scenarios. So, and then what's interesting too is if it flames out, some of those are sold to private equity.
I think that helped. I think I got it. At the point of being funded by on the venture side, there's actual belief in the business, in the people running it, that this is going to be really successful. That really exists. On the private side, at the point of funding, maybe they believe in you, maybe they don't. Maybe they're going to take you into the ground, maybe they're going to take you to the top. They just believe they can make money. Versus there is some security more in the partnership on the venture side, at least in the belief in what is being done. Is that an accurate, brief summary?
I think it's a fair depiction with one statement. Private equity wouldn't buy you believing they're going to drive you in the ground. They're going to buy you believing they can get a better return. If the outcome or the result at the end of the cycle is it's going to go into bankruptcy, it's not the ideal scenario, but it's on the table.
They're willing to go there if it is going to either make more money or minimize a loss.
That's why they're probably the private equity are the most complicated buyer and seller, because they're willing to go there. Just think about that. So when you're talking to a strategic and you're doing a deal, for example, I've acquired a bunch of companies, and I bought a company out of bankruptcy. I bought a company out of duress. I bought a public company. I've bought a couple public. I've bought a private company that was private equity owned. I've bought independently funded companies, blah blah, and they all have different different scenarios, right? And so I've got the full gambit there. And the private equity seller, the fallback is the angles are tough because the fallback is it's financing. So you're not going to find an angle. Like even in a bankruptcy, you can find an angle. Even in any strategic deal, you can find an angle. But it's really hard to find one when there's private equity behind it because there's no good angle other than that unless they're in a tough situation. If they're in a tough situation, you can make and the timing of their fund or whatever it is, but they're it's a unidimensional view. It's a return.
Yep. Got it. Can you additionally layer in, you said you had experience on the private, the venture side, and the public side. And I think you gave some nice notes on both the private and venture side. Can you give some similar notes and thoughts on the public side and how that works for our entrepreneurs who may be considering it?
Yeah, look, public is, I think it's they're all different. And so if you're working on the private side, you've got, loosely people you're reporting to, and you have different types of scenarios. On the public, you're in a cycle. Every quarter, there's a public announcement, there's earnings, there's board meetings. You have to go to the board meetings to get sign off. It's very structured. You have to go through the audit. You have to go through book close, and every 90 days, this is what happens. And then you have to get prepared. You have to go through the earnings cycle. You have to talk to the analysts. You have to do the callbacks, et cetera, et cetera. And it's a lot. It's a higher cost. It's more overhead. However, there's liquidity as well. And so your scorecard every day. And frankly, that's one of the benefits, I think. When you look at private, the challenging part for me is you never really know your scorecard. You feel like you're performing well, you're reporting to the board, you're looking at the financials, and then something could change. And so you don't exactly know what your scorecard is, meaning your value. And so you could be doing a great job, but you're not accumulating any value, for example, in your own return. And, whether I like it or not, a public company, I could see my value every day. Mm-hmm. And there is something satisfactory about that, which says, okay, I feel pretty good because I've heard, John, you were making a comment earlier. There's way too many stories across way too many industries where people think it's going to be this in terms of an outcome for them.
Yep. And
it turns out to be something else. And as entrepreneurs, as operators, it's very disappointing. And it's what I think, what I've learned is, for me, being able to see that scorecard is very meaningful. It's very
and let's not forget the liquidity part, right? Like, part of the things we talk about with private businesses a lot is you can keep growing your company, but growing takes cash, working capital, all this other stuff, and you never actually get to pay yourself, because you're usually paying yourself last. Never really get to reward yourself with the equity you've built in your company unless you actually sell it, because you're always continuously reinvesting. And whereas in a public company, you kind of have that liquidity potential and option that you can see every day and you can track it, and it's much more visible. But yeah, I appreciate you sharing that. Let's move a little bit to Extreme. And incredibly impressed with what you've built. I mean, I think, obviously from us meeting in 2013, I saw your transition to Extreme. Been there for a little over 7 years now. And certainly, you hit right in my passion and heart spot when I see you doing deals with the NFL, Major League Baseball, NHL. Can you tell our audience, what does Extreme Networks do? Because there's another angle here to this conversation that I don't think people quite understand sometimes, the technologies that are behind the scenes when you go watch a Boston Bruins game or a Montreal Canadiens game or Tampa Bay Buccaneers game, what's going on with the networking and all that kind of stuff. Can you give our audience maybe a little quick summary of what Extreme Networks does?
Yeah, so we design, develop, manufacture the hardware and software for networking connectivity. So you think of it as industrial grade Wi-Fi for, call it a public venue is a great example. And then when you have compute systems in the building or in your enterprise, when they're talking to each other, they go through a networking switch. So there's whether it's compute to storage to so on and so forth. So everything is powered by a network and all the data flows over it.
Mm-hmm.
And we have 60,000 customers around the world. We've grown through acquisitions. I mentioned a few, but we rolled up our space to create a size of company, over $1 billion, so that we could scale. We have the niches we play, the markets we play in: healthcare, education, government, manufacturing, retail, and then hospitality. Hospitality is a category that I'm the sponsor of. And I felt that doing high profile deals with customers like the NFL is where it started, would put us and raise our profile. We're a niche brand. We're $1 billion, but we're a niche brand. We're a challenger brand in our segment. Cisco Systems is the $52 billion, gorilla, and we're a challenger. And people are selecting us. We're the fastest growing networking company in the industry. We're taking share from Cisco and HPE, who are stalwart names. And the reason we're taking share is because as we've come out of COVID, there's been a huge rebound in demand across every enterprise, every vertical I just mentioned around the world. It's a global phenomenon. 50% of our business is in the US, 50% is 40% in Europe, and 10% in Asia. And that's kind of our global footprint. The behind the scenes on sports is what happens. So everything happens across a technology. In fact, I just did an interview with the Wall Street Journal and earlier today with Forbes, talking about how technology saved the Super Bowl. Mm-hmm. And it seems like a broad statement. Like, what does that mean? And you go through the evolution. Technology saved the Super Bowl. The NFL was having declining attendance. Their ratings were going down. And there's a direct correlation to who's in the stands and what your TV ratings are. And they set out an initiative and said, we need to get more people in the stands. We need everything to be more convenient. And I know you know this from your hockey days. The last thing a venue used to think about was the locker room, the bathrooms, people getting concessions, where they park. Who cares? They're on the ice or they're on the field, all that kind of stuff. And the NFL, which is heavily funded, it's a very wealthy group, was able to forward invest and say, hey, we need to improve our fan experience. That was the initiative. And it meant everything. It meant an upgrade in everything. And that included Wi-Fi and connectivity. And that meant that the objective was, we want to make it easy for our fans. We want to make it easy for our sidelines to be able to communicate and abide by the rules. And that's in baseball, hockey, football. They want to make it easy for a fan to come in and do a ticket scan and go through security without being completely, a big challenge. They want to make it easy for a transaction to occur at a concession without any problem. They want to make it easy for a fan to share their experience from the fan bowl right in the middle when the touchdown happens or the halftime show or whatever. That was the goal and objective. And we've been successful at that. So all the behind the scenes technologies, it's a massive set of infrastructure that in many of these cases, we're tied to Verizon. Verizon does 5G. You hear all about that. They do auto handoff to us and all these in NASCAR and in the NFL, and the data goes through our network. Why does that matter? Well,
let's talk about that, because that's the part. I remember you telling me about this business, and I was like, I don't think twice about it when I connect to the Wi-Fi at a field, but the data that comes along with that is amazing, right?
Yeah, the data that comes along with it is amazing. We have the insights and the analytics and everything else that you can see, and you can see lots of things. And so, quick example is, and you can take action. So you see behaviors, and that becomes the foundation for sponsorships. So Bumble is an official meetup spot for the New England Revolution because they saw in our data set that people were doing Bumble meetups happened at Gillette during Revolution games. Doesn't have Patriots games, happens there. FanDuel, DraftKings, you can rate shape. You can have a better experience on FanDuel than DraftKings if FanDuel is the premier sponsor of that venue. How do you do that? Because these are privately controlled, privately owned networks, and you can do what you want. You can change it however you want. So that's how it goes.
That's awesome. But the data. So I saw recently that you're the NHL analytics partner, right? So not only you're providing the network for them, but you're providing analytics for those teams to be able to then sell more sponsorship. To be, hey, our fans seem to like they're on Twitter the whole game. Twitter should be a sponsor. Things like that. Is that kind of the idea?
Yeah, that is. It is. It's that, and it's also at the league level. They want to know what's going on in aggregate. Then eventually, where this all leads is they want to make sure that they can prioritize those sponsors. So when they have a certain sponsor in a certain category, gambling is a very high profile one. They want to be able to prioritize said, sponsor over somebody else. You want to be able to sell a sponsorship that includes a digital touch point. And that digital touch point happens in the venue. You can push coupons, you can do all kinds of stuff, but being able to manage that and take advantage of that is what's critical.
Yeah, that's amazing. So your current role, because you've had several different roles throughout your pathway there, is the COO of the company. Sounds like you're doing some business development deals, some operational deals. When you think about your career there at Extreme and where you are now and the growth that you guys have had from where you started to where you've gotten to now, what has been the biggest learning you've had or biggest, effect that you've had to manage in that business through that growth period?
It's everything, right? So I have supply chain. That's the hardest problem right now. I have IT.
Sure.
I have marketing. I have hardware engineering. I have M&A, biz dev, corp dev. Those are all functions that are in my purview, and I do lots of sales deals too. So it's all over the place. I think, what are some of my biggest learnings? I didn't know any of this stuff when it started. It's back to that confidence thing. The CEO, he was chairman of the board. He was taking over, and we had this conversation. I said, look, I had a proposition for him, and he and I talked through it, and I said, look, I know how to do deals. I don't know any of this other stuff. And he was like, you'll figure it out. And it started with one, then we added another, and you add another, and you add another, and you add another. And fundamentally, it's just, I problem solve and I fix things. And so, I take things we had, lowest performing in a category and take it to number one in the industry. And it's not always easy. It's not always intuitive, but, it's back to that basic problem solving skill. And I think that's back to your statement at the beginning, which is, if you're an entrepreneur and my basic skill is problem solving. So I don't fit on any resume. It's hard to apply to a job. Nobody knows what the hell I do, but I know that I problem solve. And then when you talk about what types of problems do you solve, well, then it goes from the basic all the way through the most complex. Yeah. And, just because it's a bigger company doesn't mean it's more complex than something you run into on a day-to-day.
No doubt. Well, Norman, I appreciate our friendship, appreciate the time you spent with me in the past. I hope we get more of that in the future. And thanks for sharing all your messages with entrepreneurs here today.
Thank you, Norman.
John, Rich, thank you very much. I really appreciate it. Hopefully everybody found this helpful. It was fun to talk to you guys. Love to chat again.
Yeah, great. Thank you, Norman.
Please stick around for a few more minutes while Rich and I break down this episode.
Idea and opportunity, sell the story, and figure it out. You can just figure it out.
That make you nervous?
A little bit. That's why I asked him a question I had, like, oh my gosh, how do you balance sell it and have confidence you'll figure it out, but you have no idea how you're going to figure it out. But obviously when you're selling it, there's a level of confidence that you have to emit to others, or others have to believe that you can figure it out, even though you don't know how to figure it out. And that was enlightening for me.
But it speaks to, when he talked about the difference is confidence and belief.
Versus arrogance.
Right? Yeah, versus arrogance. Right? Belief in your skills as a problem solver, have confidence that you can solve problems, and then be resourceful. Like, one of the things that I think is interesting, and you may run into this all the time, but I was talking to somebody this morning who asked me to give him a call, and I gave him a call, and they asked me if I knew how to do something on Google, as an example. And I was like, no, I don't, but have you Googled it? And the response was, no, I haven't done that yet. I just want to see if you knew how to do it. I was like, well, I don't know how to do it, but if you want, I'll be back on my computer in 10 minutes. I'll figure it out.
Mm-hmm.
Because there's so many resources out there. There's so many experts out there that a lot of times what entrepreneurs are really, really good at is identifying the opportunity, is having the confidence that if that's your problem and there's an opportunity, I can help find a solution because here's my qualifications, and then go find the solution. And a lot of times, like, a couple of the businesses that I'm in that you know of, I didn't have a passion for that industry. It wasn't like, oh, I know how to build commercial retail spaces. There was an opportunity. I was able to sell the story and create a business and solutions around it, right? And so that does resonate with me as an entrepreneur, because along the way, entrepreneurs are very opportunistic, right? They're looking for those opportunities and they have confidence in themselves. But there is that line between cockiness, arrogance. I'm the smartest person in the room. That was a comment that stuck with me is,
Mm-hmm.
whenever you're in the room and there's somebody in there that thinks they're the smartest person in the room, you should probably get out quick, because that smells problem. That was a very wise comment that really caught my attention, because I've been in those rooms before. And if you are in the room and you think you're the smartest person in the room, that's a problem too. It's kind of like the poker analogy, right? If you're at the poker table and you don't know who the sucker is, you're the sucker.
Yeah.
Right. You just got to be careful about, having that confidence and belief that you can execute something versus that arrogant side of it. But I do love that about Norman's history, because it all starts young for a lot of entrepreneurs, where they're like, oh, there's an opportunity to cut lawns. I'm going to figure out how to cut lawns and I can do it. Right. And you take that, but he's taken it to an extreme, pun intended, level where really he can accomplish some pretty massive problems or solve some massive problems because of that experience he had and the confidence he was able to build along the way.
I think there's actually a quote that's like, if you find yourself in a room and you're the smartest person in the room, ... you're in the wrong room.
Yep.
Yeah. So I think that's great. I agree with that. When you're talking about resources, it's funny, as you were talking about how many resources we have, and you suggested somebody to Google something about how to do something on Google, which is, the irony is entertaining in it. I have a friend of mine who's at CertaPro that he and I do things with events and trainings and things like that. And it's the funniest thing. We'll be planning to do something. We'll want to roll out. I remember one time we were talking about maybe doing like a book club. And he and I had talked for, 10 minutes about, how do we do it? Do we get people together? Do we read a couple of chapters? Do we have them read the whole book? How do we go about it? And he's like, I just Googled how to start a book club. These are the 6 steps we should do.
Yep.
Like, literally, if you want anything. I remember one time he and I were talking about wanting to describe a vision or sell a vision. And we were talking about what would resonate with people and how to go about it, and how long do you linger on a point, and how many stories do you tell, how long. And same thing, the same guy did the same thing. And he's like, I just looked up how to sell a vision to the masses.
Yep.
Here are the, So when you talk about resources, that really resonates with me on the figure it out side. I mean, you know me, like my authenticity bug goes off when it's like, sell it, even though you don't know what you're doing, you'll figure it out. It's like, that doesn't feel great. But when you talk about there's unlimited resources out there, you can figure it out. Right. All of a sudden I take a breath and go, I totally see that. Yep.
Yeah. Because I think it's one thing if you're telling somebody, look, I know everything about this, and I'm the person who's going to solve this problem myself, and I'm going to develop this program this afternoon, and you're not generally going to do that. That's different than saying, here's an opportunity. Here's why I can help you solve this problem. Give me the contract and I'll go do it. That's a different story, right? Mm-hmm. Your confidence in your business capabilities. The one area, Rich, that, was I was both happy to hear it and frustrated in hearing it, was when he talked about the 3 things he looks for.
Yeah.
And when he said, what I look for and what venture firms look for, one of the 3 things was people have passion, but not the private equity firms. They're more interested in business continuity. And then you came back and said, well, don't people invest in people, not businesses? And it had me sitting here going, you know what? There's a reason I reached out to Norman Rice when I first moved to Portsmouth, and we spent some time together, but he had his company he had to work for. And when I ended up raising money, capital from a private equity firm, Norman wasn't necessarily advising me at that particular point, and man, I wish he was.
Yeah.
Because when I did meet with him in the aftermath of it, having coffee with him, and I told him the story of what had happened to me, there's kind of this look of, oh, I wish I was there to help you too, John, because you stepped into the trap that they don't care about you. They don't care about your people. They care about turning their financial investment into a return at any cost, and they're willing to do anything. And that was an extremely painful lesson to learn. I'm happy that he said, look, quote, where I am today is a result of multiple failures that I learned from, because hopefully I can at least take that from my experience and learn from that. But that message was so crystal clear to me. And I do love the way you did ask about the public too, because we did talk a lot about PE, venture, and public, and there is big differences.
Yeah, what I got out of the public side was that it's almost an exchange of getting liquidity in exchange for imposed structure on you that you may not like, you may not find necessary, a bunch of red tape, but as Norman said, you know where you stand. You have a constant scorecard with that liquidity, and you can cash in any amount anytime you want.
Yeah. And maybe the one part he didn't mention, which I'm curious if I had to ask him, again, is what about stress? Because when you're in a public company, you're out there, everything is out there. In a private company, you at least have it more controlled, and you're not, walking around naked in the universe with everything you do every quarter, your performance and scrutiny and press and all those kinds of things. So I'd be curious to ask him if we had this opportunity again about stress levels and how does he manage that as being a part of a public company in the eye of the public, right? I think it's a pretty big factor out there. But listen, here's somebody who has learned all different facets of things, sales, operate. Like I loved when he said, Rich, I don't know what I'd put on a resume if I had to say I'm one thing. I'm not a sales guy. I'm not an ops guy. I'm not this.
Problem solver.
Yeah, I love that because I actually resonate with that a little bit, and you may as well. Like, sometimes you're concerned about being a generalist, right? I've had that concern in my life. I'm not an engineer necessarily. I'm not an accountant necessarily. I'm that generalist, but he's turned that entrepreneurial, well-rounded skill set into quite a career.
What's the classic answer a question with a question, right? If somebody says, well, what do you do? Your answer is, well, what do you need?
Exactly.
I could do lots of things. Like what are you in pursuit of? I could probably help you. Like, tell me more about your needs. I'll tell you what I could do.
Exactly.
I had a flashback in our conversation with him when he talked about setbacks.
Yeah.
And setbacks you can either take as being a victim or setbacks you can take, he used the words, as a propelling event. It's been a while since we've had a guest who specifically has called that out, but I remember, last year, somewhere in our first 30 episodes probably, we may have had 5 or 6 guests over the course of like 9 or 10 weeks who kept talking about that, how setbacks are something that you could propel out of. So it was a refreshing kind of callback to remembering that setbacks don't have to set you back indefinitely. They can become a propelling event.
That's right. Aaron Deal, fail and fail often, right? That's something that's been resonating in my head because, again, when you fail, it's difficult. It's very hard. It's hard on you. It's hard on your family. It's hard on your friends. It's hard on a lot of things. But when you get past it, and he talked about this too, when you get past it and you can look at the confidence you've now gained from that learning experience, it will help you through your future steps. And that was something that, hopefully will work for people who experience failure in one way, shape, or form. Obviously, you want to minimize it. But if you have it, grab all the learnings you got from it because it's a gift.
Agreed.